What's up everybody, Tom here with another video. In today's video, we're talking about the latest stock market news moving the markets right now. We'll also be taking a look at our technical analysis approach on the S&P 500, Nasdaq, gold, silver, Bitcoin, Ethereum, and more to talk about what's going on right now in the markets. We've just seen stimulus approved and signed off on, so what does this mean for the next step for the stock markets around the world? Stay tuned. So guys, as we like to do, let's take a look at a heat map. And I thought the best place to start today was actually to take a look of the month of December, as we're approaching really now the end of 2020 and the beginning of 21. You'll notice here that things like Apple, Tesla, Disney have been the outperformers for the month. But I really want to just focus in on consumer defensive and also utilities. Now, utilities, if you remember and you've been trading for the last couple of months, was the hot market only around 3 months ago. And this is what happens in the stock markets. You see things go hot, then they go not, and things rotate in and out. Now, normal times during, any market over a 10-year period, you'll always have this great sector rotation. This year, we had huge amounts of tech being purchased, and then we saw a real heater come off that as people moved into other sectors such as financials, energy, etc. Now it seems to be that some tech has been picked up and that utilities have been dumped, and it will come around again. And that's why you should always look at your sectors as much as possible. I also want to talk about the month to date so far for the Dow Jones, S&P 500, and Nasdaq, as there's a really interesting thing here that I think will help traders and investors for the years to come. So definitely pay attention right now. We saw that pull up at the start of December. Then we saw a pullback into around December 14th and 15th, and then a rally in what many people call the Santa rally coming into the end of the year. Now, generally the Santa rally goes to around the 3rd of January, and we do see a pickup in the market. And we'll talk about that in just a moment. But I want to talk about this December 14th and 15th. We'll come back to that very, very soon. Let's have a look at the sectors during that period. You'll notice here again, utilities XLU has actually underperformed negatively this month. So it could be presenting value maybe in the next couple of months that we can start to break down on the channel and just break down in general. Maybe there's some opportunity there for value investment. The other thing is LiQWYD generally performs incredibly well over this Santa rally. It hasn't done as well this year, and I think that's a nature of the stimulus and the fact that we didn't see necessarily a sign off, a little bit of uncertainty coming into the end of the year on that. XLK is now the top performer as energy was, but energy's pulled off a little bit since its great gains during November into December period. Let's talk about this Santa rally though. The Santa rally is probably one of the most important seasonal events that I think any investor or trader can ever use. 77.9% of the time, the market will be higher than it was at the start of the 7-day Santa rally. And this is just an amazing statistic. It's something we should always be paying attention to. If we take a look here, from 1950 to 2019, this data is taken. Again, 77.9% of the time it'll be higher. And if we scroll down, take a look at this chart, 1950 to 2019. Notice something that happened this year. Little bit of a pull up in the start of December, followed by a pull back. December 14th and 15th, we see that recovery come through. And then, of course, that runs into the end of year, usually into the first couple of days of January. That is something I've used many, many years now, and it's worked incredibly well. It's probably the most reliable, if not the only good seasonal kind of event that's consistently provided opportunities over the last couple of decades. And I've seen it many, many times play out and really only fail once during those trade disputes back a few years ago. Other than that, Santa Rally has been an incredible time for investment around the world, and I think it will continue to do so just because of the self-fulfilling prophecy of what it means. But let's get started into the technical analysis. What's going on in the markets right now? Well, the best place to start is always going to be somewhere around the US dollar, as this is really being kind of hit around due to stimulus, due to the fact that we're seeing a lot of printing of US dollars, and it also moves the markets a huge amount, risk on, risk off kind of thought process. So for anyone that's new, we've been talking about that 89 area being hit ever since it broke through 92. We also been talking about the 20 moving average exponential here acting as dynamic resistance. And notice where the 20 is right now. It's right at the point of that 90, 70, 90, 80 zone where we had previous support, previous resistance, and we're starting to build some market structure. So we're starting to build a little bit of market structure between this 89.8 and 90.7 zone. So what is really good for US dollar traders to do right now is not only to probably trap this particular US dollar in terms of knowing the kind of key support and resistance areas, but is to watch how the market's going to react with these zones moving forward. Now, if you're thinking of going short on the US dollar, would you short here? I mean, obviously there's opportunities all the time, but maybe up in this area, 90.70, where it hits that 20 exponential, you may see selling pressure as shorter term buyers will come in and potentially sell it back down to the zone. Now, the longer it stays in a range, and possibly it could stay in a range over the January period, we may see a very big slingshot effect and great opportunity for risk on, risk off at that point. Now, do we have a clear direction? We know the direction for the US dollar is technically down. It's in a downtrend. But this is getting very, very close to where we eventually thought it would go to on the weekly and monthly charts that we did analysis on. And at the same time, it's creating some structure in here. So we're going to continue watching the US dollar, continue watching the structure. And that's something that we like to do as technical analysts. Understand there are critical points where the market can break up or down. So let's talk about this Bitcoin. And we've got this trend line that we drew up only the other day. And I popped the video on Sunday, but I shot it on Saturday, and a few people did comment. Bitcoin moved so fast, so we thought it would get to at least 26,000, and then around that point, there would probably be some resistance. Now that it's gone this far, and it easily got through 25. Remember, when a market coils below a key round number, like it was here, where it was kind of coiling just at 24,000, it was always going to blow past that key psychological. Now we're approaching that 30,000, probably the key decimal that we're looking for on Bitcoin. What happened last time? It ran 10,000 to 20,000, just under 20,000. That was the end of the bull run. And it happened all at a very similar time after, of course, all of the hype and anticipation had run out of the events in terms of things like end of the year, Christmas period, Thanksgiving, etc. Remember, a lot of retail traders trade Bitcoin. So I wanted to just quickly get rid of this trend line. I want to just quickly show you on this particular data feed. Take a look at this. We have a shooting star, or some people call it a pin bar, forming on the daily. So that's where the market's got up high and it's rejected that zone. Now, if it does it again and it rejects the zone, let's say it drew something like this, and then we saw a new low formed, new low, not necessarily closed, but new low formed, that would really be showing a significant pullback, possibly back to these 24,000 kind of points. And this is what's going to happen when you get such large moves. Now, if that doesn't occur and we see a break above this high, where do you think it's going? I think just under 30,000 straight away, very quickly too. The reason why is because when you break past this high, not only are you breaking to an all-time high, but at the same time, you're breaking past a lot of people's stop losses. Huge amounts of people, especially in the retail community, use shooting stars, pin bars, hammers, etc. as key signals for them to get in and out of trades. And they often place their stop losses right above that zone. What does that mean? When you take it out, you really start putting pressure on all their stop losses. We have a tendency to move our stop losses above, and there's a lot of manipulation that can go on there. So definitely be careful with Bitcoin where it is right now, but it looks pretty good, and it looks like it's going to try to travel to that 30,000 zone. So the channel's fully completed. 26,000 was easily smashed through. It came back down, gave us the opportunity to get back into it at that point, which is always excellent. And the great thing about having good levels when you take profit, and of course, know where you can have entries. And now we're trading in between this zone. So the longer it coils in this area, the longer it kind of starts to create a range, the more likely it becomes that it will go straight to 30,000. And I think it's stopped at the perfect area here, 27 kind of 5 to 28. A couple of $1,000 underneath 30 really points to the longer the structure coils here, the more chance that 30,000 has of being touched or just underneath it being touched. The amount of people selling at 30K though will be huge. So I would always say that if you're thinking about putting a target in anywhere, always think about how many people are going to have an order right on the round number and maybe you put it a few dollars underneath that, and you have more chance of being filled and, of course, not getting stuffed over by the market going very, very close and coming back the wrong way. It's a bit of a tip that I've learned over the years. Don't get too greedy for the dollars. So Bitcoin's definitely in a very good uptrend right now, but it does have that shooting star. What about Ethereum? Well, Ethereum, come on, let's get to $800. We got to the 750, just under 750. Look at this, 748. It stops. Every $50 for Ethereum is key. But now that it's gotten through here, it seems hard to believe that it won't go to the fabled $800, or at least a couple of dollars underneath that. Ethereum looks very strong. Everything looks pretty good. We may get a pullback back to like that 700 zone, and then maybe some buying pressure comes back in. What you're wanting to look for is time frames where moving averages have been respected. So maybe you go here on a 2 hour and you see the 20 has been respected at least once and twice. Maybe it's respected again, almost touched it just before when it came down to $710. And then we pick it up and take it in those things. Remember, it's more of a trade than an investment right now, because $800 is that expectation for at least some resistance selling to come through for Ethereum. But nice to see it going up here. Gold, let's take a look at that. Gold continues to struggle around that 1900. We've mentioned this quite a few times, just like with that Bitcoin, guys. Look at this shooting star style candle on the daily. Now, we get a close high above that. What's that going to do? Stop losses are going to get hit. We're going to see movement up. At the same time, probably going to get a 2050 cross on the daily, all very significant things. And that's going to put pressure on to the 1930 and 1960. I quite like that. And I love these wicks if they get broken up above. Of course, if we get a close under the 1850, I think we're going back down to 1830, and then we'll find support. And there's really those key areas. 1850 gets underneath, 1830. And of course, these are just my opinions. You need to come up with your own solution and own trading style to get into these types of opportunities. Let's take a look at silver. Silver above 26. Nice to see that it continues to kind of have that strength in it. I'm still very bullish on silver. I think that our longer term play towards the $30 hopefully should come in eventually. And at the same time, we're starting to see some decent structure support around this key zone. If you start scrolling down to the smaller time frames, we're on the 4 hour here, you can see that it's struggling around that set 2650 kind of zone. And maybe you set like a little set alert for 2675, and it gets above that zone. Of course, then it goes to 27, above 27 and a close on the 4 hour. Well, then we're really on for the bullish side. And just remember, go back over the daily, look at these wicks, and pay a lot of attention if the market is able to get through these zones. Very, very important levels. Whenever you get these wicks, it takes out stop losses, and then you usually see that big market momentum flow in the right direction. So let's begin our discussions on the indices and talk about the Nasdaq first off, as I think that's probably the leader right now. You'll notice that we're on the weekly, and the reason we're on the weekly is we've had this drawn up for some time, which is the range here, or the channel between this 11,000 and 12,200 has been broken. And if you take and extrapolate out that, you can see here that it's kind of predicting a 13,200 level being reached. Now, 13,200 is clearly a very big take profit here in a very big zone, but it seems to be struggling and moving up there. The other thing we'll notice is that this 20 moving average here on the weekly has been respected a few times. So again, if we get a pullback now in the markets, that's going to be a zone where you're going to see Wall Street start to pick up positions. And I think that is something that we'll be paying attention to on the channel. If we go down to the daily, again, you look at the Nasdaq, we think about what's happened. The technology has been very, very good. We can even use the daily here. Daily 20 has been a great pickup zone and continues to be so. So if we get that movement up and we see maybe a movement up, pull back there, for the shorter time traders, that's going to be your opportunity. I don't see too much other than that, other than we broke a new high, and that's signaling further Santa rallies into these new periods. So definitely pay attention to those when you're looking at the Nasdaq. 20 moving average on the daily, very, very good. And for deeper pullbacks, 20 moving average on the weekly could be exceptional as well. S&P 500, very, very similar. 36.40, this zone we talked about, the support just continued to act as great support. It's now broken and closed above on the real market, above that 37.20 zone. That's signaling further bullish pressure. That's probably going to the 37.50 and then most likely something like a 3800. Remember, if the Nasdaq goes and reaches that fabled kind of channel break profit, then at the same time, the S&P 500 should at least be trying to reach that 3800 zone. So everything looks pretty bullish right now for the market up to the beginning of January. And then after that time, possibly we do see a pullback that it's become pretty common in January as well. January and February, often we get that kind of little sharp pullback correction and then flow on effects for the rest of the year. Remember, there are some months that are very, very bullish in the market, and we'll look at those throughout the next couple of videos to talk about which actual months you want to be invested in the market and which months you don't want to be invested in the market, because it's a super interesting statistic and something that I love to bring into the technical analysis as well to kind of try to predict certain things that are going to happen. Remember, if we use good quality statistical information over 100 years, it often works. And we're not always going to have some kind of crisis period like we had in 2020. So it's time to start getting out our books, start to get those statistics going on, and of course, get some good trades in. So if you enjoyed today's video, please remember to subscribe and of course hit that alert button. We'll see you in the next video, and we hope everyone is doing very well. Speak to you soon, guys. Bye for now.